Hi everybody, I'm Adam. I'm back with another video, and today I'm going to show you exactly how I passed my phase 2 on another funded account. So now this is going to be my second live $20,000 funded account. So I now have a total of $40,000 of funding from my Forex funds. I'll show you exactly how I did that. I'm also going to go over the news and what happened and what we can expect in the economy and also the markets going forward. So let's get into it here first with the news. All right, the news came out today. This is the first thing I do always when I open up the charts on a trading day, so I know what comes out. Today at 10 o'clock we had the JOLTS openings, and the numbers came out at 9.93 million of job openings. Look at that. That's lower than we've seen in months. Going over here to this article, we can conclude the Fed is doing their job, and they have been raising rates 9 times since March of 2022, and now we are starting to see 1.7 jobs open for every one person looking for a job, where it has been 2 to 1. All right, so keep that in mind. What does this mean? This means that they are doing their job and they're likely to lower their rates and maybe even have a pivot. What can that mean for us? That can mean for us that the market might be starting to flip around. Going over here to the market and taking into consideration what is happening with the news. So we are starting to see the jobs come down, and then that can actually lead to lower inflation because less people are looking for a higher paying job, and then they get the higher paying job, then they go spend more money. So it's a whole trickle down effect of what the Fed is doing with their rates. What can we expect in the market? So if they do pivot, which they are expected to the middle of the end of this year or next year, it really depends on what they want to do and what numbers come out going forward. But if we do get more good information, we could expect the market to go higher. Not financial advice, but we got this high here, we got this high here, and we also have these highs up here. I personally expect the market to react off the monthly order block here and then work our way up there. So last month of March, we had a really bullish dildo candle that basically looks like it's about to catapult price up to this area. And throughout the rest of this month of April, I'm going to be looking for pullbacks down in this range to see if we can get up above these highs, because these are clean equal highs up here. So if you look at the resistance level, a lot of people are slamming their stop loss that are short right above this high, and people also see it as another position to go short to continue down lower because everybody's like, oh, the market's going to come down. But their stop losses are up there. We got to keep all that in mind. So these are the levels I'm looking at going forward for the rest of the week, basically the rest of the few months that we have here. So if we do pull back down in this area, I'll be looking to see if we get a nice accumulation to keep going higher, or if we go higher now, I'll be looking to see if we can get continuation up within there. The lower time frames, similar situation. Like if the news stays pretty well, nothing too bad happens, banks don't go under and shit doesn't really get that dirty, then I'm going to be looking for continuations, obviously, just with pullbacks and all that. 4-hour time frame, we got to realize that we are up at this area, at this high resistance area. There's a lot of stop losses up there. So when price gets up to areas like this, I'm going to watch and see price action of what it does. As you can see, we get up into here and then we just stall and then we start trading down. What is this doing? So if you really think about, if you're a market maker, what are you trying to do? You're creating a ceiling up here, and then the more time you spend creating a ceiling, the more time people have to take a short position to trade it all the way down. Is that possible to happen? Yes, anything's possible. But I'm going to be watching this area to see if they do want to make a fake out and then run the stops up there. So this is a clear pool of liquidity for me that I'm going to keep an eye on. Even if we trade down in here, I'll be seeing if price ever does want to get back up into this area. So just watching price, I want to see if we can get up into here and see how this area actually respects, because there is a lot of money up there. Like, you got to think about that. Who has their stop loss up there? A lot of retail traders, a lot, even hedge funds have their stop loss up there, but there's a lot of people that have their stop loss up there. There's a lot of money. Keep that in mind. Where is the money sitting? That's how you get rich. Not financial advice, but you got to know where the money is flowing to. Where is the money in anything you're doing? Business, trading, stocks, just all the stuff like that. Where is the money flowing to, and how can we get with the flow, and how can we take advantage of the current situation that we have now? All right, I'm going to go over today's trade now and how I got funded on my other account. I'm going to go over here to Twitter and basically show you the trade that I took. I took a short here on NAS all the way down to this area, down below these lows, as there was SMT divergence with the other indices. As you can tell, taking the short within here, taking the short within here. And I'm going to go over ES as well. And here's the information here. And then I upgraded the account after I got the email. But going forward into the chart, let's see how this actually played out. We'll go over to ES here just to show you what I was looking at this morning. Go over to the 15-minute time frame. Now it's going to get pretty slow, so try to stay with me on this. There's a lot of information on this. And yeah, let's get into it. So where's the money sitting? Like I was just saying, if you're looking at this chart and we didn't see this low taken, like where's the money? Obviously, there's money down here and there's money up here. All right. I'm keeping my eyes on those areas and what's price willing to do. So I have right on my notebook, I have buy side and sell side targets. Sell side was lower, buy side was higher. And it's like, okay, when we have indication and we have experience, we got to know when to trust ourselves when price is going to reach that area. So I know what I need to see. When I need to see it is the market willing to go there. So we have our draw on liquidity down lower. This is my low. And then we have our draw on liquidity up higher. When the market showed this 15-minute bearish candle, this bearish dildo candle right here, that was like green light. Oh shit, we might be going down to these lows. So that was the market showed their hand to me. So I started taking trades up within this area after this 5-minute rejection here. We started trading down lower. Right before market open, I took a trade, break even on the trade, okay? And if price was to reach this area down here, I would have passed just on that one account. Well, just that one trade of the series of trades I've been taking the past 2 months on the account. So then price traded back down, and I was looking at the new day opening gap that was sitting right within here, the NDOG. So the new day opening gap is from the close of yesterday market and then the open of Asia. So that area is this area right here. I'm looking at the chart and basically what the chart wants to do. I took another short position, and then we had another break even on the trade. Once we broke down lower here, we had S&P or the other indices. I took a short on the lower time frames on like a 15-second within here, shorted down, and then I took another short after this rejection here. I took this down to here. I was looking for lower prices down within here and then down within here within the NWOG, new week opening gap, which are these blue boxes. And I did not get the TP hit on that. Break even on this trade, break even on this trade right here. So now what? News comes out at 10, and I knew that was going to happen. That's why I moved into break even like so quick. If it was going to drop, it was going to drop. And then I'm like, okay, news is coming out at 10. I want to wait. I know what I need to see, and I trust myself. I wrote that down on my notebook. I wrote down, I know what I need to see. I am a profitable trader. I know what I need to see. I am objective. So I wrote that down this morning and just basically reaffirming to myself that I know what I need to see. That's why these affirmations work, and then I'm going to execute on the trade when I see it. So price came up in this area, rejected. And what do I need to see? I need to see a damn displacement in price, okay? Where is the market structure shift? It's after this trade starts to trade away, all right? It's after the trade starts to trade away, and I've really been implying the inverse fair value gap into my trading system. Look at this 5-minute fair value gap here, and then we basically trade down. I don't want to see it come back up above the high or the opening range opening price. It's right here, which is the opening price from 930. So I did not want to see it come back up above there at the market structure shift. So I actually took my trade here on NQ because it looked weaker to me. We had the higher high, more liquidity was taken, and I just liked this gap better. And that's what I felt like trading today. And I felt like we can go down a little bit lower, but I took my trade, closed it out right here, and that's where it was. So what gave me the confidence? So you might be asking, how do you know what's gonna play out? I have the news that came out. I'm waiting until after the news to look for a setup. I've trained my eye over the past 3 years of knowing what to look for. I saw my displacement in price with SMT divergence, with the inverse fair value gaps. We're also break into the NWOG, and now we're at the NWOG high, as you can tell, this blue box from the new week opening gap. And we also have our draw on liquidity. And you might be asking me, why am I trading towards this draw on liquidity here? Go to the 2-minute. There's a gap. Go to the 1-minute. There's relative equal lows. And I recorded this live. If you want to see that, I recorded it. I have it in my recording somewhere. But I was recording myself as this trade played out. But it came down, took out the equal low, and actually traded up. And I was like, holy shit. This thing actually reversed right after the TP. But those are all the reasons why this trade even played out. We'll go over here to the SMT divergence. So now recall ES from the other chart where we had these equal lows right here. When we hit the equal lows right here, this is when NASDAQ was hitting my take profit right within here. So we made a lower low here when NASDAQ was making a higher low, also taking that internal liquidity from the 1-minute. So all those are all lining up to become a profitable trade, and that's part of the reason why I took the trade off as well. I'm really trusting my trade and trusting that liquidity is going to be taken, and I'm looking of where price can go before I even get in it. I knew these lows down here. I knew all the lows and gaps down within here. I was actually expecting more down below this low, but obviously we got to take money as the market gives it to us. Like, not financial advice, but that's how I learned how to trade. It's good advice I give myself, because it's like I'm just going to take the trade and pay myself as it makes money available to me. At the end of the day, we had SMT divergence again, where these made the higher low, this made the lower low. I was still looking for lower prices, possibly here on ES and also YM, clear equal lows. We might even trade up into this range and hit those later tomorrow. Same here on NASDAQ, these equal lows. But since we had the SMT divergence, it's like, how many times can these people get stopped out? Everybody buying this from here, from here, from here, from here, from here. Stop out, stop out, stop out, stop out, stop out. So that SMT divergence, where these are making the higher highs, is basically indication that we might be moving higher. And it's going to be a high resistance liquidity run if we are going to break down below that low. Going down to the 2-minute time frames, what can we see here? We saw this internal high taken, shift in market structure down below here. And if I was to take anything, if the conditions were better and there was not SMT divergence, this is a clear as day sell from here on ES. We shifted market structure after taking the internal high. We had the entire model lined up that I usually talk about here anyway. So this model shift down, come up, test in, trade down. So that entire model is actually in here. We come up, trade down in, and then trade down lower. That actually did not play out because of the SMT divergence. That's why I used that. So there's a high resistance liquidity run. That's why I'd like to stay out of trades like this. If I know the conditions are not good, I'm not going to take a trade in that. I also want to go over yesterday's trade as well. So I'm going to close this up here. I used the replay mode to show you this. This is what I took yesterday. I showed it on Twitter. But we had SMT divergence at the highs of the other indices. And NASDAQ came up and hit the top of the NWOG. And then I was looking at price action from there. Where can price reach to? So we have the high here, the high here, the high here, the high here. These are all taken. Everybody shorting had their stop loss taken. So I'm like, okay, now I'm just waiting. Where can price possibly reach to? So below this low, where's the inefficiency in price? It's this 1 hour gap from here to here. That's what I was looking at within that range for price to possibly reach down into, which it ended up going into. So the whole time I'm watching price, watching the NWOG, watching the other indices create SMT divergence, and I'm looking down lower, where can price reach to? Price has a shift in market structure, and it has these other fair value gaps that are marked up within here. I do not want to see these inverse gaps traded back through. So we have this inverse gap from here to here. We also have this order block from price reaching up into there. We hit that area. We come up, we tap into this area, we trade down again. And this 1 minute candle is confirmation that price is going to trade down lower. So that's why I entered right there. And on the 15-second time frame, we did have this model start to play in where it traded down, came up, traded down, tap into here, trade back down lower. So on the 15-second time frame, that's actually what we saw within this area. We trade down, come up in, trade down, boom, entry. Look at that. Boom, model played in. Copy that model if you want, not financial advice, and just back test it and look at what you want right there. So these equal lows, boom, boom, take partials along the way, take partials here, here, here. That's what I did. Boom, traded away, easy as day. You know, it's train your eye. That's all I can say. But so I'm gonna wrap this up here. So let me know if you guys have any questions, and that's just the daily review from today. Take it easy, guys. Love y'all.